Welcome to The Tax Factor, the UK's top tax podcast from Blick Rothenberg, the tax, accounting and business advisory firm. This week with Nimesh, Shah and Ola Adigun.
Welcome to The Tax Factor, the UK's top tax podcast. I'm Nimesh Shah, CEO of Blick Rothenberg. I'm back again this week for The Tax Factor, and I'd like to give a warm welcome to VAT Master Ola Adigun, who is making his debut on the podcast. Welcome, Ola. Really looking forward to chatting to you.
That's a great introduction. Thanks very much for having me here.
Before we go on to Ola's musings of VAT, we've got through 69 episodes of The Tax Factor without talking about Blick Rothenberg, as these are all about tax. But I'd like to give a very warm welcome to our new colleagues from Greenback Allen. A real milestone moment for Blick Rothenberg, because this week we exchanged to acquire the business of Greenback Allen, which is focused on helping Japanese inbound businesses come into the UK. I'm sure on a future episode of The Tax Factor, we'll hear about all things Japanese. But that's enough about what's going on at Blick Rothenberg, and back to life in tax. Last week, Ola, Heather and I talked about getting your tax return in on the 31st of January, and I can confirm to all of our listeners that yes, I did manage to get my tax return in. It went in about 11:30 in the morning. My tax was paid. I got a nice message from HMRC saying they'd received my tax return. So I'm all good and I'm all done now for another few months. But there were about 1 million people who didn't manage to get their tax return in. Ola, HMRC have released some stats this week about all those delinquent filers. What did you make of that?
Very interesting reading it makes. One of the headline points is that HMRC have raised about 110 million from the late filers. So that's quite easy money for them, to tell the truth. There is more of the move towards everybody filing online. And I think the stat they gave there was about 97.4%, almost getting close to 100% of people are submitting online. But I think about 300,000 people or taxpayers are still submitting paper returns.
What was interesting in some of these stats away from digital and paper, I agree those stats have been moving up on people filing online, but actually the number of people that need to file self-assessment tax returns, when I looked at the stats from last year, has gone down. Were you expecting these numbers to have gone up? I thought there were stories of fiscal drag and people having to pay more tax on their interest. I was expecting a lot more self-assessment returns this year. What do you make of that?
I was expecting there to be more people that fall within the remit of having to submit self-assessment forms for various reasons. One of those are the people with what they call a side hustle being looked into and being required to submit self-assessment forms. So there are various initiatives that HMRC have been driving to actually increase the number of people that are required to submit self-assessment forms. But that's not necessarily reflected in the figures.
Interesting data, and maybe we'll delve into that a bit more when HMRC releases some more information exactly about what's going on. And let's see what the self-assessment world looks like this time next year, because still lots of stories in the press of people fleeing the UK because of the government changes to non-doms and national insurance and inheritance tax. So I think these data points will paint an interesting picture as time goes on for HMRC and the government. If you are one of the circa million people who haven't filed their tax returns, there's some penalties and interest you need to watch out for. So by the end of this month, if you've not paid your tax, you will get hit with a 5% surcharge, and there's that daily interest of 7.25% running all the time. Speaking of people who did get hit with a penalty, there was this unbelievable story, Ola, in the press about this poor individual who had HMRC bailiffs knocking on his door because he'd not paid the child benefit charge.
What's the phrase? Was it using a nut?
Using a sledgehammer to crack a nut.
That's it. Yeah, I mean, for £1,000, it seems a bit steep for HMRC to actually send the bailiffs in. If you look at the circumstances behind it, it's a high-income child benefit charge, and that's quite an unpopular charge anyway. It's a charge that requires individuals earning over £60,000, where there's a party in the household that gets child benefit, to actually make a charge back to HMRC of the child benefit received.
There was no doubt with this individual that they were liable to the child benefit charge. And we've spoken about lots of tax cases on the Tax Factor involving this particular unpleasant, unpopular tax charge. But here, in this case, the judge ruled the charge was due. The penalties, though, might have been withdrawn, but the judge also made a bit of a direction and maybe a little bit of a slap on the wrist without going this far to HMRC, that they suggested that the action of sending bailiffs around for £1,000 penalty was disproportionate. But the judge did not want to give a strong view on that. They said you need to take up HMRC's behaviour with HMRC's own complaints department as well. But to me, it feels completely disproportionate as to why HMRC would want to spend so much time and money to recover a charge that this has now cost the taxpayer even more because they've had to go to tribunal and fight this out as well. I'm sure, Ola, in your line of work in VAT world, you've seen lots of cases in your time where HMRC have probably rightly had to send the bailiffs round to those businesses that have been evading or fraudulently reclaiming VAT.
It would normally be for bigger figures, I would expect. And I think the one thing to point out, this is an unpopular charge or effectively a tax on parents. And I think it actually stings more for single parents because it's not a charge on the household income, it's a charge on the individual. So a single parent earning over 60,000 will be stung with the charge. Whereas in a household, if you've got two parents, then that's a household income of, if it's under 120,000, then, there won't be any charge. But the Chancellor in the budget did not make any changes to the requirements for this charge.
Yeah, and I don't think we're going to see any major changes to child benefit charge coming through, but I do suspect we're going to see lots more cases still on high income child benefit charge. So we will be kept busy here at the Tax Factor. Another person that's been keeping the world busy this week has been the new president, Donald Trump, because he's been making the headlines on tariffs. So it would be remiss of me, with all your years of working in VAT and customs, you'll have to give me an explainer about what he's been up to, and actually a bit of a ready reckoner, a bit of a basic, back to basics on tariffs really before we get into some of that detail. Why would the president want to use tariffs? What are they?
Well, this takes me back to my college days, to tell the truth, when the world was so much more a simpler place. Tariffs effectively is a tax on goods that are being imported into a country. Can be used for a number of reasons. The economists can have different views on the effectiveness of tariffs, but one thing that they do agree on is the fact that free trade is the gold standard, as opposed to some kind of protectionism, which is, has many ramifications across the borders.
If free trade is the gold standard and our new president is saying, I'm going to hit China, Mexico, Canada with an export tariffs, what's he really getting at by doing this? Because surely that's going to hit the economy, isn't it?
When you look at tariffs, there are pros and cons for imposing tariffs on goods. The pros can be protecting local industries from cheaper imports, creating and saving local jobs, for example, creating a more level playing field, stopping undesired goods coming into the country and preventing things like dumping. And it also can increase the revenue to the government as well. So those will be some of the advantages from raising tariffs against imports coming into the country. But it can also have certain disadvantages because the tariffs that are levied are paid by the importer, and that importer will be a local business, and that local business will then make a decision either to absorb those tariffs or to actually charge them on to the customer, which effectively could have an inflationary effect in the country. So it also creates things like trade wars, which I think is what we're seeing on the global front, especially with US, Mexico, Canada, and China at the moment. We've got the beginnings and the rumblings of a trade war. So yes, it can be beneficial, but it also can have disadvantages. And I think what I would say, the message that was given to people was that the tariffs actually would be paid by the countries from where the goods are coming, but that's not necessarily the case. It's normally either the local importer or the end customer that will absorb this cost.
That's really helpful for me as well, just to demystify what's been said in the press about tariffs being imposed on these different countries, because I think you're right, actually, the people who get hit are the end consumer. No one's going to really make the amount of money disappear and go away. No one's going to absorb that cost. So it has to be really inflationary for the end consumer. And so I can understand the benefits, actually, that you've just kindly explained, Ola, around why tariffs could be used to flush out some of the bad stuff. But it does seem like this is being used, and not to get too political here on the Tax Factor, but it does feel like it's being used as a bit of a weapon for our new president to get what he really wants on a global stage. Again, I'll be interested to see how this plays out over the next few weeks and months, because as quickly as he announced them, he paused on them. And I wonder if they have been used in a more tactical way rather than some of the reasons that you've talked about. But in the meantime, it's going to be hugely disruptive, I expect, to global supply chains and ultimately pricing as well, especially when inflation has been yo-yoing around over the last few years. A real simple explainer there on tariffs. Thank you. I have learnt something new today. Before we finish up, we've talked about tariffs, but your real love, Ola, is VAT. And you've been doing this for a long time. So a missed opportunity if I didn't get you to talk about one of your favourite VAT cases. And over the past 69 episodes, we've had some real humdingers of VAT cases. But what's your favourite?
It's a very recent case and it's quite topical at the moment. The upper tier tribunal decision in the case of Sonder Europe Limited, and that's quite a recent decision, which brings clarity to the application of a scheme which is called the Tour Operators Margin Scheme, which is in the context of travel and accommodation industry. Tour Operators Margin Scheme is a bit of a mouthful, so from here on in, I would just refer to it as TOMS. It's a very complex scheme. I counted the back guidance leaflet and it has 32 steps in all, which I think is quite considerable. And it's one of those areas that brings a lot of shivers to us VAT advisors because, in effect, a lot of us try and steer clear of it if we can. It's an issue that's coming more and more to the fore, and we've had a number of cases involving Tour Operators Margin Scheme. Now, what is the Tour Operators Margin Scheme? Businesses usually account for VAT on the value of their services or goods that they sell. And the Tour Operators Margin Scheme is different because the suppliers are required to account for VAT only on the profit margin. That considerably reduces the amount of VAT that the supplier needs to account to HMRC. So this scheme is used by certain people within certain business areas. Sonder Europe is a provider of short-term leased accommodation, which it in turn had leased from landlords on a long-term basis. Now, the first-tier tribunal ruled in favour of Sonder, agreeing that the services fell under the TOMS, which meant that they were entitled to account for VAT on the margin and not on the total amount of income they received. So that was putting them in a favourable position. HMRC disagreed and appealed to the upper tier tribunal, and the upper tier tribunal have released their decision, and they sided with HM Revenue and Customs and found that the services did not fall within TOMS, and therefore Sonder Europe was required to account for VAT on the total value of those services and not just the profit margin, which is a considerable reversal in fortune for Sonder Europe. Now, some of the key points that came out from that case was to do with the application of TOMS, and the upper tier tribunal provided some clarity on the application of the scheme. And those key points include that the services acquired must directly be for the benefit of the traveller. Also, those services must be supplied without significant modification and processing. So effectively, the nature of the services coming in should reflect the nature of those services being provided by the supplier. Ultimately, the courts found the services that were acquired by Sonder were not equivalent to the services that were being onwardly supplied to the end customer and therefore fell outside the TOMS. So this creates a certain amount of clarity for businesses that act in their own name in the travel industry. So businesses currently applying TOMS may wish to review their position in light of this case.
Thanks, Ola, for taking us through that TOMS case. I've learned a new acronym, as I always do, from our tax colleagues here at Blick Rothenberg, and sounds like actually quite a complicated set of circumstances, but something quite simple in the end, that VAT was applied on a margin, but actually should be applied on the whole lot. And I expect an expensive mistake there, an expensive outcome, I should say, for the company concerned. I was half expecting you to talk about marshmallows, Jaffa cakes, and poppadom crisps, and maybe we could have sampled a few after the tax factor. So you've chosen something that is a bit more niche than what I'm usually used to, but it'd be great to have you back on a future episode to sample some of our delights in the tax factor kitchen. Ola, it's been great having you on the programme this week. Thank you for taking us through tariffs. Thank you for taking us through tax returns that have been filed late. And most importantly, thank you for demystifying the position on the TOMS, which is something new that I've learned.
The Tax Factor from Blick Rothenberg.
So that's all we have time for. If you enjoyed this week's episode, please give our sister podcast, Brave Business, a listen, hosted by journalist and broadcaster Declan Curry. The latest episode looks at the topic of the founder's mindset. How can founders become effective leaders? And what challenges might they face? You can listen on our website or wherever you get your Tax Factor podcast.
We release a new episode of The Tax Factor every Friday on the Blick Rothenberg website and all the usual podcast platforms, so you can listen whenever it is most convenient. We record and release them in less than 24 hours, so you always get the very latest news and updates. If you enjoyed the podcast, please subscribe and give us a rating or review. Next week, Heather Self and Robert Salter will be here discussing the latest tax news.
But for now, that's it for The Tax Factor. Have a great weekend and goodbye.
That's The Tax Factor. If you enjoyed The Tax Factor, please like, share and subscribe. Join us again next time on the UK's top tax podcast, The Tax Factor. The Tax Factor is a Blick Rothenberg production. Copyright 2025.